Let's just touch on how the Naira has been faring, because we actually have seen a bit of strength coming through. We saw a bit of dollar inflow into the interbank market a little earlier this week. And of course, that was by sales from Royal Dutch Shell. And then it seems that the central bank, which has done for the third consecutive time now, selling less dollars than what has actually been feeding through. So this is affecting the sentiment on the ground.
Exactly, Eleni. Interesting action from the central bank window, and also the way market actually interpreting their action. We think overall they're trying to keep in line with their theme of price stability. We don't think that they'll want to see so much volatility or swing, especially at the central bank window. I think they've responded in a very appropriate manner based on the couple of flows that has come into the country in the last couple of weeks, and I think they have on the larger picture. I think that the central bank has, like I said, responded better in a commendable way, and I think the market also has taken its cue from there, and as such we've seen markets between this last couple of 3 trading days actually opening and closing flat from where it opened. On Monday, market opened at 156.70 levels, and today closed barely marginally higher. CBN staying flat at the window. We see them the demand at the CBN window being less than what was actually supplied for the first time in it seemed like ages though.
Nwabueze, I mean, let's just touch on that move by the central bank. The fact that they are selling less than what they initially offered within that window. What is this actually telling the market? Because it seems that, I mean, is this creating a bit of confusion, would you say, or do you think that it is creating the price stability that the central bank is looking for?
We actually think it's creating a price stability the central bank is looking for. That's our thought. We look at your actions from the last couple of auctions that has done previous week into last week. We look at the amount on offer. We look at the way that the rates have moved within the period, and we think typically, I mean, I might err on that, but typically, if you'd seen this kind of movement, we think that we would have seen something a bit more on a wider swing on the central bank window. But no, we've seen a form of smoothing across the prices, and that's very interesting. That has created a sort of price stability. Overall, for the man sitting outside looking at the price action at the central bank window, he has a lot more comfort because he's saying to himself the price has been smoothed over the period of time. Well, there's no need for panic. There's obviously spare capacity that the central bank has, and overall it gives an overall positive turn on the currency. That's our view.
Yeah, I mean, looking at the actual auctions, because we know that a number of around $150 million is thrown around, and usually only around 138 million is sold, or even 113 million sold. What kind of auctions are you foreseeing going forward? And is this creating a bit of a liquidity problem on the ground? Or would you say that, as we were talking about price stability here, but what is the actual experience of those that require those dollars?
We do not think that the central activity at the central bank window is creating a bit of illiquidity. No, on the contrary, we think that the central bank would respond appropriately to the demand that comes into the market, into their window. We think that they will continue with their one of the responses that we typically get from the governor is that they are able to meet the demand that comes into the window, and we think that any pressure coming into the window will be adequately met by the central bank, such that whatever concerns that the low volume that on offer now might want to create, we think that any rise in demand will be adequately met, and as such, you would definitely see that the central bank is responding appropriately in that demand or in their willingness to fill all genuine bids that are coming through the window. I don't think currently now you think the central bank action is providing any form of illiquidity in the market.
So let's just
now, with the fact that we have a couple of oil flows.
Well, just touch on T-bill auctions as well. Any specific trends that you are expecting on the yield front?
On the T-bill side, we actually say I think overall we've seen yields actually dropping a bit. except for today, there was a blip, which typically will happen when you have any form of auction coming into the market. We think that the market would want to see the market overall in the secondary market is trending a bit lower, so we think that on the auction front you might see a rate a bit lower also.